Hey, everybody, welcome back. And you know, it's funny, we did a video yesterday and YouTube was having an issue because there was like no volume. But here's the thing, and it coincides with today. Hey, listen, rates absolutely plummeted to a 3-year low. Okay, absolutely, they went down. And the question is why? And are there any caveats? Meaning, are there any strings attached? Why did they go down? We're going to talk about that. We're going to talk about the metrics that happened in December, where we're heading actually almost the middle of January already. We're going to find out where we're going. Hang on, let's get the show on the road. All right, so a lot of you are saying, okay, wait, what do you mean the rates plummeted? What the heck happened? Well, this is super important to understand. So when we talk about rates coming down, we talk a little bit about what's going on in the market. So we had our jobs report that came out that actually was promising, which means then people mean the industrial investors were going to be pulling out of bonds and going right into stocks, which would make the treasury go up, make bonds come down, interest rates go up. So, but that didn't happen. Nay. Why? Well, because we had the administration that said, hey, listen, we want to create some affordability for some of those home buyers because rates have been, hovering around the low sixes, like 6.16, 6.19. Okay, lower rates, like 0.75% lower than where we were at last year. And you might remember when I said, hey, we may very well dip into the high fives. Don't blink, but we may dip into the high fives, and we did. Yes, believe it or not. We did. And in fact, there's some still lingering opportunities in the high fives, not low fives, low sixes, high fives. If I said low fives, I can't remember. But anyway, because this is live, and no, I do not have a script that I read. It is like the old way, they say it's off the cuff. For those of you that don't know what off the cuff means, old announcers used to actually write on their cuff little bullet points so that they knew what to say. I don't have any cuffs, so I just got to just be smart. And there we go. So every week you get real-time information and not scripted work. So let's talk a little bit about, I should say, this right here. So when we talk about the rates, we talk about what is happening and why the mortgage-backed securities went sky high. And as you can see, the left-hand side, that's July 2023. That's when the Feds in the peak there between 2023 and 2024, that's when they the Feds stopped buying mortgage-backed securities. And that's when that peaked out, which was basically 7.5, bounced up against 8, but didn't quite hit 8. But nonetheless, when we take a look at today on the far right-hand side, Jan 26, you can see that blue line just absolutely drops, right? So when we talk about that, the key thing to understand, okay, is when we come back and we talk about what happened. And what happened is super simple. When you consider that the Feds don't buy or don't control mortgage rates, okay, they control, again, car loan interest rates, credit card rates, what banks lend to each other on a daily basis, what commercial lending does. They handle all what we call short-term. Long-term are absolutely controlled by the bonds, mortgage-backed securities, which are publicly traded out on the market. And you're like, wait a second, so what does that mean? Well, when the government back in 2020, when you were all supposed to be home, buying or staying home and staying free of the COVID, the difference was they started buying, they being the Fed, started buying all the mortgage-backed securities. When they buy all the mortgage-backed securities, that creates scarcity. That means that the value of that mortgage-backed security goes up. You might say, what the heck is a mortgage-backed security? Super simple. Mortgage-backed securities are when you have your Chase Bank, you have Bank of America, you have Qualistar Credit Union, you might have Harborstone Credit Union, you might even have Boeing Employees Credit Union. They're all writing these mortgages. And then what they do is they write them to Freddie, Fannie Mae guidelines, okay? And they say, okay, from here, boop, we're going to sell those off. So we're going to sell 100. So B of A sells 100. Chase sells 100. BECU sells 100. Qualified Credit Union sells 100. And then Freddie, Fannie, they buy all those up. And then they will create what's called a mortgage-backed security worth billions, like hundreds of billions of dollars, and they will create these portfolios. Well, not always hundreds, but anyway, and then they will sell them out on the open market. So your insurance company that needs a guaranteed rate of return, or your retirement, wants to get a guaranteed return. So a retirement fund will go and they will buy these mortgage-backed securities because it's that guaranteed rate. And you say guarantee, well, the likelihood of all those people failing to pay their mortgage is super low. So it's a mitigated risk for a guaranteed return. Well, when they sell those out on the open market, if the feds come in and they buy them all, that creates scarcity. That means the price goes up. When they start selling them back, like they did in basically 2023, then that flooded the market, the value went down, interest rates went up. So the feds, Trump said, hey, listen, I want you to make affordable housing a little bit better. He knows how to do it temporarily. That's the caveat, it's temporary. They will go in and actually buy $200 billion worth of mortgage-backed securities. On average, there's about $3 billion a month, between $30 and $30 billion a month of mortgage-backed securities that will be released. They will go in and buy, and that will drop that rate down. That's when we went from 6.16 all the way down to 5.99, and some rates down to 5.75. Super important. Now, if you're considering making a refinance, super important, okay? Because now, normally you want to take at least minimum 3/4 of a point, okay, or 8%, okay? 1 point is 1%. So 3/4 of a point to 1 point or 1%, you want to drop that rate. So if you're anything above 6 3/4, now's a great time to refinance, get your rate down. It would make sense. All right. So with that, let's keep the show rolling, and let's talk a little bit about what is happening in our market. So, and we're going to come back to mortgage rates when we hit Freddie's stats here. Look, the 25 December takeaway, we had a great 2025. I'm just telling you, I had a great December market. We were super busy. Just as a market in general, the total number of properties listed increased by 23% year over year. That's important to remember. Month over month, active inventory actually declined. Yes, you heard it. So technically, we had more homes coming on market, but we took them off. We reduced our inventory level. And in fact, we had more sales in December than we did last year at this time, or even more sales than we had in November, which is a rarity. And that is super important to understand, because with rates that before the Feds started committing $200 billion towards buying down rates, we were still at low rates. Inventory was there. We were pulling off inventory 2 to 1, meaning we had on average 250 homes with running 7-day average, 250 homes coming on market. We would take off almost 600. Okay. So it was a really, really good month. Let's keep going here. All right. Nearly all counties, Washington State, experienced year-over-year inventory growth. 19 out of 27 counties posted double-digit increases. Now, okay, so let's be serious. So we have Jefferson, we have Ferry, Thurston County. Okay, I'll give that one. Clallam, again, small area. Okanagan, vast area. Okay, yes, a very vast area, but not a lot of homes. It doesn't take much when you have so few homes to make those numbers look really exciting. We're going to get there when we start talking about some of the REOs, when we say there's a 33% increase in new foreclosures or REOs on market. Guarantee you somebody in Olympia is going to say, oh my gosh, it is Armageddon, because we have a 33% increase. We'll get to that. Hang on. So let's come back here. When we talk about closed sales increased by 4.1% year over year. Okay. Month to month, sales rose 2.9%, meaning over November. Year over year, closed sales increased 21 out of the 27 counties. Now, our numbers technically would have been better except for the condo market. Oh, the condo market's been, bam, they've been taking some double Tyson bunches. I tell you, they've been taking a little bit of a hit. And you might be saying, why? And it's the same thing with new construction. Why? Well, because when you have a nice influx of homes that came on market, plus rates hit historic lows over the last 2 years, not even the third year, because we hadn't done the announcement of the mortgage, the buy down for the mortgage-backed securities, MBS. Here's the funny thing. People came out of the woodwork and were absolutely looking at securing a home. Made perfect sense, right? Sellers were a little more negotiable. You had interest rates that were low, and you had more home opportunities. What more could you ask for? I mean, really. And those people, they absolutely took advantage of it. We did some amazing transactions, which is, you know, the whole point of what we're doing in all of these reports. So let's continue this. Median sales price. I circled condominiums because condominiums hurt these numbers because the condos, especially in King and Pierce, they took a shellacking and dropped down the numbers. We do have a breakout for each one of the counties, and we do break them out every month for the cities. Feel free to take a look at those if you want any of those specific counties, especially with the lenders or the lending institutions we work with. We'll fire those off to you, and that way you can have that, and they get a video with it. But nonetheless, when we take a look at it, the median sales price technically came down, and that's not unexpected based on the condos. Month over month, the median price declined even from November. Again, the condo market really brought those numbers down. Technically, they're a little bit higher. You'll see some of those numbers later. Counties were the highest median price, $900,000 for San Juan, $808 for King, and Snohomish was $730,000. Lowest, Columbia, Okanagan, and Pacific. You know what? Not unexpected. I mean, those are outlying urban areas, and 100% expect that. Now, if we take a look at what's going on as far as trending in the market, again, a lot of people, including Lawrence Yun, the economist for the National Association of Realtors, he's saying, hey, we should expect double-digit sales this year, where we had very modest sales year over year from 24 to 25. And then, of course, when we take a look at the upper right, you can see, look at that, 5.99. That's 0.75% difference from what we saw last year. It's like 0.77 difference. It's almost a full point. It's pretty crazy when you think about it. And a lot of buyers are seeing that. And again, if you're on the fence, get rid of the stirrups. Get into the market, because right now is a massive opportunity. Remember, they're only buying $200 billion worth of mortgage-backed securities. If we're doing an average of, 30 billion, in a week or a month, that's not going to last very long. It's going to go super fast, especially when we get our spring market where we see an influx, and then we're going to see rates probably start to pick up just a little bit. All right, might even go higher because we're going to see that transition from scarcity to, hey, we've got more inventory, which is going to drop down the bottom level, drive up mortgage rates, and that'll be brief, and then it'll recover again. All right. So if we take a look at this, look at that, 0.77. You can see that we have been heading in a downward trend very nicely the entire year. We did have the normal Fed drops as anticipated. That's the small humps that you will see. But all things considered, look, it's really awesome, okay? When we take a look at this, we talk about where we were at a year ago. Look, 6.93 last year at this time. That's pretty impressive. That's real dollars saved. In fact, I was having a conversation with some very good clients yesterday, and they were talking about, home pricing. They're like, well, hey, what if we increased our home price to get over that next hump? What does that do? And I said, well, the amazing part is with rates being almost more than 0.75% lower than where they were at this time last year, or even a half a point from when you first started looking, that gives you more buying power for the same payment amount. So they started looking at just over that crest, and there's a couple of homes that I think are potentially a really good fit for these guys. Why? Because for the same payment, they can buy more when the rates come down. It's going to be temporary, even with refinances. Okay, so keep that in mind. All right. So if we pop over, remember there is a calculator for you guys. Okay, it goes and it piggybacks with the 5 questions you must ask when getting a mortgage loan. Look, there's no marketing here. It's super simple. You can put up to 4 different loans, put them in line and take a look at it, and you can get the real-time information. Remember, know how to ask the questions when getting quoted mortgage rates. If you don't know the questions to ask, you will pay more, and it will cost you tens of thousands of dollars. Look, it's a free tool. Use it. It's just there. If you have questions, put them down below. Want to hear any questions that you might have. All right, so let's talk about a little bit of the days on market. Here we go. When we talk about the Northwest MLS and we talk about what's going on, hey, the bummer is market times have gone up a little bit. Seasonally normal, but a little bit higher than we expect. The funny thing is, we started dropping down to 95% loan to value, or not loan to value, sales price versus 97% where we were at before. Meaning, if we have a $100,000 house and it sells at $100,000, that means that we sold at 100% of listed sales price. At 95, that means we listed $100,000 and we sold at $95,000, $5,000 difference. That's a 95% list to sales price. And so we did drop down a little bit. A little surprised. Why? Well, because interest rates came down, we had a little more inventory, but sellers were super motivated to get things moving based on the October, November numbers. And they, smartly enough, hey, it's better to take a little bit of a haircut than you can move on, get a better sale, and capitalize on another opportunity, which, again, you can get better pricing. So it's a lateral thing, just year-over-year metrics, maybe not as exciting, right? Okay, so when we take a look at the 7-day running average here, listen, in the last 7 days, we put on 660 homes. This time of year, we're always seeing more homes come back on because they'll cancel in December and then come back on in January. And that's part of what your back on market that you're seeing. We still had 616 pended sales. That is impressive because, again, we are marching forward and everybody's capitalizing on the lower interest rates, which, again, that translates to tens of thousands of dollars, in your mortgage payments, but only if you're interested in saving money should you do that. I'm just saying. All right. Now, if we come over here, we take a look at the super accurate information. Look, come in, get your real-time metrics. So subscribe, and share. Smash that subscribe button. Let us know that you're listening. This is our first episode 2026. So we'll have a little bit of fun with this. All right. Look at that. Sales on the right-hand side. You can see sales outperformed November. And here we go. So we use the center chart because obviously the right chart and the center chart are identical because it's still January. Really, at the end of the day, let me blow this up for you. Our numbers are super good. So the bottom chart, for solds, we're only off 3 homes year over year, but we're basically 9% higher as far as the volume of sales, which is about 80 homes ish. More today than what we had last year at this time. We take a look at December. Look out in December sales were negative just before the end. And then poof, we shot up, to 5% more. So we did an amazing job in December, all things considered. And then when we pop over here, we take a look at the average sold price is up 10.4%, almost 10.5% as far as actual sales prices. List prices came down a little bit, and we're seeing an increase in that because interest rates are coming down, and we are definitely seeing a lot more buyers being aggressive out there. And that is super important for sellers, but super important to remember, don't overprice your house. That is the kiss of death. I'm just telling you. All right, keep that in mind. All right, so let's come back here. When we talk about new construction, here we go. Again, if the center chart and the right-hand chart are going to be the same, look, they have 42 less homes on market. Let's blow this up. 42 less homes on market, 1 less sale than what we had this time last year. But we have, 50 less pended homes All right, why is that important? Super important, because as we take a look at the bottom chart, December, we ended up, even though 5% less on sales, we had an 8.7% increase in actual pending sales. Not uncommon. And those numbers did super well. And you might be saying, okay, George, you mentioned the why. Why would new construction sales, fall off? Why didn't they go up? You said they were offering more incentives. It's a great time to buy between October, November, and December. And I said, absolutely. But when interest rates dropped and 23% more resale inventory came back on market, it was unbelievable. Okay. Everybody gravitated to homes that were in the closer in areas, have bigger lots. Sure, it's not new construction, but the trade-offs many times are definitely worth it. Today we were looking at new construction lots, 2,500 square foot lots, 3,400 square foot lots. They're getting smaller. Okay, people want a little bit more space, and that's not uncommon. There's trade-offs, right? And so when you take a look at that and a 10% premium for new construction versus existing, it was a no-brainer for a lot of people, and that's why our sales were so strong. That's why condos were absolutely suffering, because people were going to the new construction, or the resale, I should say, not new construction, going to the resale, because the volume increased with the rate reduction. They were able to buy a home versus a condo. Anyway, that's just good business sense. Can't blame them for that, right? Okay, so if we pop this back, look at the chart. Our sales absolutely rocketed up in December, just like they did last year. That's called incentives, right? Average sales price was up 3.8%, roughly about $40,000. Super important to keep in mind, because as we take a look at the velocity of what's going on in the market, that is going to absolutely increase over the next couple of months as people go ahead and buy, because of the interest rates getting down into the high fives. All right, Banco and Homes. Pretty boring story, all things considered. Here we go. Look at this. Okay, we have 18 new homes more than we had last year. And this is 3/4 of Washington State, mind you. That's peanuts. Here's our, we had 4 home increase. That's 33.3%. That's just because we have so few foreclosures, so few REOs to worry about. We're one sale off, but look at that. Hey, sales are down 16%. Oh, look, 16% increase on pending sales. Why is that important? It's not. And the one that's super important is the 4 homes at 33%. Why? I guarantee you somebody's going to come in and say, look, bank foreclosed home inventory sales is up 33%. And everybody's going to think, oh my gosh, the market's falling. And it's not. It's 4 homes. But I guarantee you somebody in Olympia is going to do it. Guaranteed they're going to do it. And next year or next week, I'll probably bring those people out, because it's crazy. Anyway, if you have any questions, put it down below. We will answer most questions within about 30 minutes, except for on Sunday. If you have any requests for other reports, let us know. There's a on our site, you can go and take a look at different city sites. And if you have special requests, let us know. We'll burn it off to you. In the meantime, have an absolutely beautiful weekend. I'll see you on the next video. And, well, it's a little chilly outside, so stay dry and stay warm. Take care, and Happy New Year.